What if I told you one of the world's largest property empires, Dosen T, belonged to a tech billionaire, a hedge fund, or a government, but to a church? Not a corporation with shareholders, not a sovereign wealth fund, a religious institution. While most people imagine churches surviving on Sunday donations and charity drives, a quiet financial machine has been expanding across continents, buying farmland, commercial buildings, apartment complexes, ranches, timberlands, and prime urban real estate, and almost no one noticed. How did a faith founded by frontier settlers become one of the most powerful institutional landholders in modern history? Why does a church need so much property? And what happens when spiritual authority meets corporate-scale finance? Tonight, we're not talking rumors. We're refollowing a timeline step by step to uncover how the Mormon Church built its global real estate empire, and why its structure looks less like a charity and more like a multinational asset manager. But to understand how this happened, we need to go back before before investment funds, before billions, to a time when survival itself depended on land. The Church of Jesus Christ of Latter-day Saints was born in the 1800s, an era when land meant power. In early America, land wasn't just property. It was food security, political leverage, economic survival. From the beginning, Mormon leadership understood something most religious movements ignored. Faith without infrastructure collapses. While other churches focused mainly on congregations, the LDS Church focused on building self-sustaining communities, farms, mills, warehouses, housing, and entire cities. This wasn't accidental. Early leaders promoted a doctrine of collective preparation. Members were encouraged to pool labor, resources, and land. The goal wasn't luxury, it was independence from hostile governments, unstable markets, and external control. In simple terms, faith became strategy, community became capital, land became insurance, and that foundation would quietly evolve into something far bigger. After repeated persecution and forced migration, Mormon settlers finally established stronghold territory in what would become Utah. But here's the key. They didn't just settle land, they organized it. Church leadership oversaw agricultural production, water rights, city layouts, trade routes, storage systems. Land ownership was centralized under church-directed structures. Members worked it, the institution controlled it. Why does this matter? Because this created a precedent. The church wasn't just a spiritual authority, it was an economic coordinator. While most religious institutions relied on donations that were spent immediately, the LDS Church reinvested surplus into productive assets. Instead of burning money on short-term expenses, they acquired farmland to feed communities, commercial buildings to generate rents, property reserves for future expansion. This created a feedback loop. Land produced income gives income, bought more land gives more land, created more income. The system compounded, quietly, relentlessly. Fast forward into the 20th century. America is industrializing. Cities are expanding. Real estate becomes one of the most powerful wealth-building tools in history, and the Mormon Church adapts faster than most corporations. As membership grows globally, the institution begins acquiring property not just for temples and meeting houses, but for strategic investment. Office complexes, agricultural mega farms, urban development projects, retail centers, residential housing portfolios. This isn't charity property. This is income-generating real estate. What made this possible was a unique financial advantage. Few organizations possess consistent revenue without shareholders. Every year, members contribute, tithing a steady, predictable cash inflow. Unlike businesses, the church doesn't face quarterly earnings pressure or shareholder rebellions. No dividends, no hostile takeovers, no market panic selling. That stability allowed leadership to think in decades, not quarters. They could buy land and wait. While investors chase fast returns, the church could hold property long-term, allowing values to compound slowly and safely. This is exactly how institutional wealth grows. Here's where things become interesting. The church doesn't operate under one obvious brand name when investing. Instead, it uses a network of holding companies, subsidiaries, development firms, agricultural operations, and asset management entities. Why? Because scale attracts attention. By separating assets across legal structures, the organization achieves liability, protection, operational efficiency, public invisibility, regulatory flexibility. This is the same strategy used by multinational corporations and sovereign funds. But unlike governments or corporations, the church isn't required to publish full public financial statements in many regions. That means the true size of holdings is difficult to calculate. What we do know is this. The LDS Church owns massive tracts of farmland across North America. It controls prime commercial real estate near temples and urban centers. It operates cattle ranches, timberlands, and agricultural processing facilities. It invests in residential developments near growing metro regions. In effect, it behaves less like a traditional church and more like a long-term institutional investor. Why property? Because real estate offers three unbeatable advantages. 1. Inflation protection. Land and buildings rise in value as currency loses purchasing power. 2. Stable cash flow. Rent leases, agricultural yields, predictable income streams. 3. Political safety. Property grants influence over zoning, development, and local economies. When inflation hits, currencies fall, but property often rises. When markets crash, stocks swing wildly, but land remains tangible. This makes real estate the perfect backbone for institutional wealth preservation. The church didn't gamble on speculation, it built slowly, methodically, systematically. For decades, this system operated quietly. But in recent years, scrutiny increased. Journalists, regulators, and former insiders began asking uncomfortable questions. How large is the investment portfolio? How much is held in property versus financial markets? Why does a tax-exempt religious institution control such massive assets? Suddenly, the invisible machine became visible. Reports emerged about massive reserve funds. Public debates intensified around transparency, taxation, and accountability. For the first time, many members themselves realized the scale of institutional wealth. And this created tension. Because once wealth becomes public, expectations change. People start asking, is this money being used ethically? Is it helping the poor or just growing assets? Where is the line between stewardship and accumulation? This is where the story shifts. Because the empire that was built for stability now faced something it couldn't control easily, public scrutiny. And that scrutiny would trigger fallout, backlash, and attempted reforms. But before we get there, we need to understand what happened next. Because the response to criticism reveals the true priorities of power. For decades, the Mormon Church's financial system operated in near silence. No flashy investor presentations. No quarterly earnings calls. No corporate branding. Just steady accumulation. But secrecy has a shelf life. As investigative reports began surfacing about massive reserve funds and institutional investments, something changed. The public narrative shifted from admiration of efficient stewardship to suspicion about scale. Because when an organization claims spiritual purpose but operates with corporate efficiency, people start asking uncomfortable questions. Members wondered where their tithing was really going. Journalists questioned tax exemptions. Regulators began reviewing reporting structures. And for the first time, the church faced a paradox. Its greatest strength, financial discipline, became its greatest vulnerability. Here's the deeper issue. Transparency threatens control. When an institution's power comes from centralized decision-making and long-term asset accumulation, public scrutiny creates pressure to justify every move. Once numbers become public, people compare wealth to charitable spending. Media creates narratives of hoarding versus helping. Governments debate regulation and taxation, and suddenly the narrative shifts from responsible stewardship to corporate-style accumulation. The church responded carefully. Statements emphasized humanitarian work, disaster relief, and global aid programs. Leaders highlighted temples, schools, and community investments. But critics weren't satisfied, because the core question wasn't charity, it was scale. Why does a religious institution need investment structures comparable to multinational corporations? And more importantly, what happens when financial power begins to rival spiritual authority? To manage perception, institutions often try surface-level fixes, press releases, selective disclosures, publicized charity campaigns. But these don't change the underlying structure, because the system itself depends on continuous tithing inflows, long-term asset holding, minimal liquidation, compounding investment strategies. This isn't a short-term fund. It's a generational financial engine. And once such a machine is built, dismantling it becomes nearly impossible without destabilizing the institution itself. If leaders suddenly liquidated assets, property values could crash, local economies could be disrupted, internal financial stability could weaken. So, instead of structural reform, the strategy became narrative management. Control the story, limit disclosures, emphasize mission language. The machine kept running. Is where the story becomes bigger than Mormonism. The LDS Church isn't unique. Across the world, institutions, religious, governmental, educational, non-profit, are quietly becoming financial empires. Universities operate billion-dollar endowments. Foundations invest in hedge funds. Charities own commercial property portfolios. Governments run sovereign wealth funds. The pattern is identical. Stable income gives asset accumulation, gives institutional power, gives political influence. This is how modern power works. Not through armies, through assets. And real estate is the ultimate asset. It controls housing, food production, urban development, local economies. Whoever owns land controls the future of cities. Is the repeating cycle we see across history. 1. Institutions accumulate capital. 2. Capital is converted into land. 3. Land appreciates in value. 4. Ownership becomes centralized. 5. Power becomes concentrated. It happened with feudal lords. It happened with industrial tycoons. It happened with modern investment firms. Now it's happening with institutional investors, including religious ones. The result? Fewer independent property owners. Higher housing prices, more centralized control over infrastructure, and the public rarely realizes who actually owns the land beneath their cities. This brings us to the philosophical conflict at the center of this story. Is wealth meant to be preserved or deployed? Is stability more important than generosity? Is building reserves responsible or excessive when poverty still exists? Every institution answers these questions differently, but history shows us something important. When organizations prioritize preservation over purpose, they slowly become what they were originally meant to resist. Systems built to protect communities eventually protect themselves first, and that's the danger. Not corruption, not scandal, but mission drift. So, what happens next? 3 forces will shape the future of institutional wealth. 1. Public transparency pressure. As digital journalism grows, secrecy becomes harder to maintain. 2. Regulatory scrutiny. Governments facing debt and housing crises may target institutional landowners. 3. Generational expectations. Younger members demand ethical finance, accountability, and visible impact. These forces will collide, and the outcome will determine whether religious institutions remain trusted moral authorities or become viewed as corporate entities in spiritual clothing. Let's bring this home. Here are the 3 most important lessons from this story. 1. Faith alone didn't build the empire, strategy did. The Mormon Church didn't accidentally become wealthy. It used disciplined, long-term asset strategy. This shows that institutions grow powerful not through belief, but through financial systems. 2. Real estate is the true engine of institutional power, not stocks, not donations. Land, control land, and you control stability, influence, and future growth. 3. Transparency is the new battleground. In the modern world, secrecy creates distrust. Institutions that refuse openness risk losing legitimacy, regardless of their original mission. Here's the warning most people miss. When institutions become too financially powerful, they stop needing public trust. And when trust is no longer required, accountability disappears. That's not just dangerous for religion, it's dangerous for society. Because concentrated wealth always reshapes politics, housing, education, and opportunity, whether the owners wear suits or robes. So here's the real question I want you to think about. If a religious institution becomes one of the world's largest property owners, is it still primarily a church? Or has it become something else entirely? Something more powerful? Something less accountable? Something far more permanent than belief? If this documentary changed how you see institutional money, real estate power, and hidden financial systems, hit the like button so this reaches more people. Subscribe if you want more deep investigations into global wealth, money, history, and financial power structures. And comment below. Do you think religious institutions should hold massive investment portfolios, or should wealth always be redistributed? Your answer says more about the future than you realize.